Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani here. I hope my videos are helping you become better traders and investors, and you're able to decipher the moves of the markets a whole lot more better after hearing my videos. Friends, in this video, I want to specifically address those traders and investors who take exposure, either short-term tactical trades or medium-term delivery-based strategic investments in the metal stocks, in equity markets, and trade metals on the commodity exchanges. You see, both these things, prices of metals on the commodity exchanges and prices of stocks that are in the business of industrial metals, are closely related. So if metal prices move, stocks of companies that are in the business of mining metals also move. Now, what has been happening is that metal prices have been moving in tandem with all other asset classes from the last week of March 2020. That's when the COVID-based lockdowns were imposed and the markets started to zoom. Now, I've been time and again telling you that I don't subscribe to the hypothesis that this is a super cycle in industrial metals. I will admit it is a bull market, but it is a bull market triggered by a lot of money floating around in the markets, and B, supply side disruptions. Now, this video is bringing to you aspects that you're not really going to hear much in the mainstream or social media, because nobody is bothering to monitor this. You see, in the month of May, a leftist, by leftist I mean a person with communist ideology in his politics, won the elections in Peru. Today he is the president and his name is Pedro Castillo. Now, since the time he has come to power, he has wanted to renegotiate mining leases with companies which are A, domestic, and B, international. So earlier you could come to Peru and say, I want a lease on so many mines. I'm going to mine for metals here and I'm going to pay the royalty to the government of Peru. All fair. But this gentleman comes and he says, look, I'm not happy. I want renegotiation. Obviously, higher prices. All right. So he ran into a storm. Recently, he faced a move to impeach him in the parliament, and there was resistance both from domestic and overseas companies that had dealt with the government. Just when you think the problem in Peru seems to be subsiding, 3 days ago, another leftist, another person with communistic leanings, has won the elections in Chile. His name, Gabriel Boric. Now, he is all of 35 years old, a bachelor, and young and passionate. And the first thing he's done after winning the elections is renegotiate lease of mining companies. Now, he's promised that he will basically try and extract more money out of miners. And obviously, the miners are threatening to shut down unless the government softens its stand. What will logically happen is that metal prices will, in the interim, I'm using the words interim. In the interim, metal prices will go up, and by extension, you'll see stocks of metal companies go up on the NSE and the BSE. You will start hearing all the noises about a super cycle and a grand super cycle and grand super cycle coming in again, because we all, and I'm using the word we as an all-inclusive, myself included, we all like a bull market because money is relatively made faster in a bull market because people are comfortable with buying first and selling later. So we are all going to bite the bait of that super cycle and grand super cycle theory, and then just like Peru, saw the president being brought to the earth by impeachment motions, you can remain assured the guy in Chile who's promising to renegotiate rates will also face resistance, both foreign and domestic. And then again, metal prices will come down to reality. That is when your metal stocks will also react to metal prices. And do remember, this happens to be the financial year end of both FIIs and international hedge fund managers. Now, international hedge funds have far more money than your regular mutual funds. The reason, they are heavily leveraged and they also have to boost their NAVs. And hedge funds are one of the biggest players in the commodity arena. So I would not be surprised if the remaining days of December 2021 see bullish activity in metal prices. This is just massaging of the NAV by hedge funds. And of course, now you have supply side concerns from Chile in addition to Peru. Now, why should Peru and Chile matter? Hey, why does Saudi Arabia matter in crude oil supplies? Because it's a major supplier. Peru and Chile, you can easily verify that on Google, are major suppliers of industrial metals. Now, if these guys are going to cause any kind of disruptions, either the government shuts down the mine or the miners shut down the mine in protest against government policies, the result will be the same. There will be a shortage. So I repeat again, this is not a super cycle, but a supply disrupted, artificially created, man-made disruption which will jack up prices in the interim only to fall again later. Don't get suckered into this bull trap. Be very careful. Trade if you must in stocks of metal companies. Keep a very tight stop loss and let's be careful out there. On this cautious but optimistic note, I bid goodbye to you in this video, not before reminding you to click like on this video. If you liked what you saw, subscribe to my YouTube channel if you haven't already done so, and click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, good, bad or ugly, I'd love to hear from you. Also, let me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Thank you for your patience. Thank you for hearing me out. Till we meet again in my next. This is Vijay Bhambwani signing off for now. I wish you have a very profitable day. Take care. Bye-bye.